Okay, so we saw stock shooting up last week. It was called MP Materials. It's a U.S. player in rare earths. The Pentagon became a major investor in this U.S. operation. Of course, America is anxious to secure its supply of these materials. In this case, it includes at least two elements that are used to make powerful magnets. And the Chinese have been threatening to or restricting their exports of these rare earths. Let's talk more about MP Materials. We're joined by David Deckelbaum, Managing Director in Equity Research at TD Cowen. David, thanks very much indeed for coming on the show. Tell us, what is your rating on MP Materials and what do you like about this company?
Yeah, thanks for having me, Andy. We have a buy rating on MP and a $55 price target. I think what's evolved from a very simplistic Chinese supply chain hedge story has now really morphed into an evolved story that has extremely enhanced government support in terms of economics and now becomes a real cash flow compounder in the out years when you think about building out the upstream, getting into the midstream with NdPr separation, and then obviously supporting the downstream magnets production, all with really premium pricing that's now guaranteed by the U.S. Department of Defense.
They're still building out some of their operations, but one of the big things is an actual processing plant.
That's right. If you think about MP right now, most of their revenue has come from effectively restarting a mine. You can recall several years ago, this was a SPAC that began trading. They restarted this rare earths mine at Mountain Pass in California. They brought it to record levels of production, run rating at somewhere around 46,000 tons a year of rare earth concentrate. And the next phase is exactly that, is really ramping up this midstream separation, getting to NdPr oxide, which is something that is really only performed in 3 countries right now between China, Malaysia, and now hopefully the United States.
Is there a risk that the Chinese will flood the market and destroy their profit margins, for example?
Well, I think that's the most interesting portion of this deal last week, right, is in the past, we've seen rare earth trade wars erupt. We've seen China restrict flows. We've seen China flood the market in the past, and that's resulted in a variety of situations for other countries. This is the U.S. Department of Defense effectively giving MP a price floor.
Right.
So even if the market were to become flooded, MP now effectively has their production financially hedged. The execution risk obviously remains on being able to deliver those volumes.
Is there a risk now? I know I'm kind of speculating here, but now that government is so deeply involved with MP Materials, there'll be a push to avoid the optics of MP making huge profits. People will say, well, that's at the taxpayer's expense.
I think what's interesting about the rare earths, if you take a step back, is this was a problem that the United States government could discreetly solve. This wasn't this all-encompassing trillion-dollar, plus project. This was something that, perhaps required about $1 billion of investment in various forms. The U.S. taxpayer is also taking an equity stake in the company with the government. They made a $400 million preferred equity purchase. They also have some warrants that would also bring proceeds to the company. And then further, as the company starts manufacturing magnets, the U.S. Department of Defense effectively becomes a 50-50 equity partner beyond a certain margin floor. So I understand, obviously, the logical pushback, but in this case, the government's really becoming a partner for commercialization.
And from what I've seen, neodymium and praseodymium, the two crucial rare earth elements for powerful magnets, that's at the core of MP's plans right now?
That's right. If you think about rare earths in general, right, if you're creating a concentrate that contains mostly either light rare earth elements or heavy rare earth elements, the largest value of those elements is NdPr, which is effectively separated later into an oxide of NdPr, which gets used in the construction of permanent magnets.
It's a fascinating game, really, isn't it? Because the U.S., other industrialized countries just neglected this stuff for decades, thought, well, the Chinese will do it for us.
I think I think it was really neglect by choice. It's a very challenging business. It's capital intensive. In many ways, it can be chemically intensive and environmentally sensitive.
Yes.
And then, obviously, this is one element where China controls about 85% of the global upstream and even more of the downstream on the magnet side. So I think in many ways, this just became a multi-decade problem where you had new demand centers coming from things like electric vehicles, wind turbines, and now drones, and obviously defense technologies, anything that really requires a motor in many ways. So I think that demand center grew substantially, and I think the rest of the world kind of had waited too long to really get back and solve this problem. But again, this is something that, given the fact that the U.S. was only able to do this because they had a resource that they could invest in, and then hopefully proliferate this industry beyond MP.